How's it going, guys? Welcome back. In today's video, I'm going to give you my 5 biggest confluences that we can look for when we are looking to trade from order blocks. So if you follow these 5 confluences and put them together when you are looking at your order blocks, you won't go far wrong. So what I'll do first of all is I will go ahead and explain obviously what I want to see, and then I will show you some examples on the charts so you can then go away and then backtest them yourself. So as you can see, we are on the charts now. And then what we all need to do is, this is sort of the diagram that I will explain. Now, as you can see, we are in bearish structure right here, and this works both in bearish and bullish scenarios. Obviously, we look for the same things no matter what direction we are trading in. So as you can see, right, we come down, we get a little retracement here and a breakdown, and then a retracement coming in to our area of interest, which would be our order block. So the number one confluence that I do like to see personally is a break of structure. So first of all, we have seen a break of structure below this structure point here to the left. So we've had a break of structure now, and this is confluence number one that I do like to see. The second confluence that I do like to see will be a sweep of liquidity. So as you can see, what has happened is we've come down, we've generated this high right here, and then we've come up and then swept this liquidity above this high. So we've had a sweep of liquidity and a break of structure so far. The third confluence that I do like to see when I'm looking at my order blocks or supply and demand zones will be a fair value gap left behind. So this fair value gap will be on this leg of price right here. If you don't know what a fair value gap is it is basically just a 3 candle formation, right? So you've got a candle 1, you've then got candle 2, and you've also got candle 3. So what we're looking for, right, is we are looking for a gap between the wick of candle 1 and wick of candle 3. And then if there is displacement within the market, there will be a gap between this wick and also this wick, creating our fair value gap. So that's just a basic overview of what a fair value gap is. If you don't know and you need a better explanation, I've got videos on my channel about that. But that is the fair value gap, and that is confluence number 3 that I do like to see when I'm looking at my order blocks. Now, confluence number 4 for me will be inducement, which is basically just liquidity above or below the area of interest or the zone that we are looking to trade from. So this can come in terms of a high. Now, it can be generated on this leg of price right here. So it could be generated right here, just before the area of interest. Or it can also be like this. Now, as you can see, we have generated a high. We've engineered liquidity just below this area of interest right here, our supply zone in this case, or order block. And this right here would be our level of inducement. So this right here would be our level of inducement if I just mark it up as liquidity. So as you can see, what we've got so far is we've got a sweep of liquidity. So the order block that we are looking to trade from has swept liquidity. It's broken structure. It's left behind a fair value gap. We have engineered liquidity in the form of this inducement level right here. And the fifth confluence that I do personally look at, and one that is, an important one and a very good confluence when looking to take a trade and looking at where the momentum lies, is a retracement to our order block in a corrective manner. So as you can see, what we've got is we've got this really nice impulsive move down. We've got a very slow retracement right here, very corrective move back up to our order block, showing us that price is slowing down. Once we reach our order block, we tap in, where we can then enter from this zone. Or we can look for a confirmation entry on a lower time frame, and then we can look now to target all of the liquidity below these lows in this leg of price. So they are the 5 confluences that I do personally look for when it comes to order blocks, guys. As you can see, this is liquidity that I was talking about before, all generated below these lows. And this is when the price can then impulsively break down and take out this low. Now, they are the confluences explained on a diagram. Let's go into the live markets now and show you some real life examples so you can go away and look at this in your own trading. So starting off with example number 1, we are on NZD CHF. And then what you will notice we have happened is we have swept liquidity above these highs. We have broken structure below these lows. So a break of structure. We've also broken structure below this low right here. We've taken out this low as well. And then what we've got is we have got our fair value gap resting just below our area right here, showing real momentum to the downside. We have engineered liquidity in terms of this inducement high right here. So we've got sweep of liquidity, break of structure, fair value gap, inducement, and we've also got that impulsive move down, very corrective, slowing down price action right here, tapping into our zone before we see a continuation taking out this low. So technically what you could have done is you could have got involved around this area right here. You could have entered just straight off this zone if you wanted to do that, or you could go down to a lower time frame to look for a confirmation entry. And then as you can see, a very, very clean move. It's got all the confluences that I did mention previously. And this zone right here is very, very powerful. So jumping on now to the second example, GBP AUD. It's got the same characteristics and overall the same thing that we do look for on any given currency pair or asset. So as you can see what we've done, again, we'll just break it down right here. We've got a sweep of liquidity. We've got a break of structure. We've also got our fair value gap. So we've got our fair value gap right here. We've got our engineered liquidity in terms of this inducement high. And we've also got our impulsive move down, corrective, slow moving price action back to our area of interest and the area that we are looking to get involved from. And here is where you see price then explode down, coming down to take out this low. So again, what we could have done is we could have got involved on a trade right here, just straight from this zone, covering the highs just to make sure that our stops are safe, targeting down towards these lows down here. Or you could again looked for a lower time frame confirmation. But personally on this trade right here, don't think you would see much of a confirmation because as you can see, we've come in aggressively and then come out aggressively. So, chances are that there's not actually confirmation in this. So you would have had to enter straight from the area. So jumping now on to the last example in today's video. This will now be on gold because all of these concepts do work on any asset. You can trade pretty much anything you like with these. It applies to all markets and it is very, very powerful. And it's something that I've used in my trading for a long time now. I've spoken about this years ago when I first started the YouTube channel. So it works, and it has done for a very long time. So again, we'll break this down. As you can see, what we've got is we've got our sweep of liquidity. So we've got a sweep. We've also got our break of structure above these highs. We've got our fair value gap right here. And we've also got our inducement low, which would be this low right here. It could also be considered as this low, closer to the area that we're looking to trade from. The closer it is, the more powerful it will be. But nevertheless, this would be our inducement low. So if we just mark this out, we've got our inducement. And as you can see in this example right here, we do push up aggressively, but then we also push back into our zone aggressively. But with all the other confluences, like I said before, sweep of liquidity, break of structure, inducement, fair value gap, this area right here is high probability. And it's, one where we are looking to take price higher to ultimately take out this high right here. So what we've seen in essence is we've seen a break of structure. So a low, a high, a higher low, and we're now looking to put in this new higher high from this order block. So they are the 5 confluences that I do look for. The first 4 are the most important. The corrective move back to our area of interest is a added confluence, and it's something that is very, very nice to see. So this is overall how you find the most high probable order blocks. If you go ahead and follow these 5 simple confluences, you will notice that this does change your trading for the better, and you will see more winning trades from these zones that you do pick. So that's pretty much it for today's video, guys. If this video did help you out, please leave a like on today's video. If you have any questions, leave them in the comments. And without further ado, thank you very much for watching, and I will see you in the next one.